Hi guys, this is going to be a quick video. This is basically my trading strategy for Forex. This isn't for binary options, this is purely for Forex. This strategy can be used more or less on any asset, but please make sure you back test it before obviously just going all out on it, and please use good money management. So just risk between 1 to 3% of your account balance, pushing it to the max, say about 5%. That should be your stop loss, so 5% of your account balance maximum. You should be going for about 1 to 2% normally anyway. This strategy can be used on any time frame from 1 hour upwards, and it's a really simple pattern just based off of the zigzag. So we have the A leg, the B leg, and essentially what we do, we trade the C leg. So we wait for the general trend direction and we wait for the pullback, and then we just continue trading in that trend direction. And we're swing trading, so we want to risk a small amount and essentially maximize our profits. And that's what we have been doing. Now, I've got loads of examples of trades I've been taking, but this trade is one that I took, and I just want to run through the strategy quickly. I want to make this video really quickly just so people who don't have much time can watch this. First of all, what we need to have, the moving averages. So we need 2 EMAs, as you can see, and 1 SMA. So just go to indicators here, type EMA, and double click this, and then also type in SMA and click that once, and then you'll have your EMA and SMAs. For the EMAs, go to format, have one as 55, and then one set to a 13 period moving average, and then the smooth moving average just sets it as 50. Okay, so once we have those, this will then give us our general trend direction. I like to trade on the hour chart using this strategy. So what we do with these moving averages, what we're looking for is this big effect here, how they expand. Now this would give us the indication that there's obviously people buying this. If it was the other way around, it would be people shorting it, they'd be selling it. But with this, we can tell there's a lot of volatility as well, because when the bands are kept close together, it's quite consistent how it goes. But as you can see, the bigger these bands expand, the more volatile the market would be. And what we're looking for is just this effect here, because that indicates to us that the market's been bought and it's slowing down. And essentially what we're looking for is the pullback, and then that's where we go to enter the trade. Okay, now what we do, we go down here on the left, we select our fib retracement. Because we are going in an uptrend, we're going to draw from our last swing high, swing low, to the next swing high, which is up here. You might ask, why don't we draw it here or up here or here? The reason I'm drawing it to this one is because when I took this trade, the only data I had was up to this date here at 4 o'clock. I couldn't see past here because this hadn't happened yet. Now, I always say draw to the right, so our fib levels would continue with the charts. And there we go, at the highest point, at the lowest point. And what we're looking for is the market to pull back, and we'll start to see that as the candles close below the 13 exponential moving average. We're waiting for price to come down, touch the 50% line, and then that's where we're looking to enter the market and either take a buy, or if it's coming down, for instance, this way, if we're shorting it, waiting for it to come down, pull back, and then that's where we take the sell. And this pullback is where short-term traders will try and squeeze as much out as they can. So obviously people will be selling here, knowing that's going to go up, but they just want to squeeze out as much money as they can before obviously the market starts reversing and going upwards and the bulls take over. So basically what we want to do, we just want to trade with the trend. Okay, trend is your friend. Okay, just remember that. Now these websites here, these basically run into more detail. I don't want to cover them now, but I'm going to put these links into the description of the video. So just check the description of the video. And basically going back to here, what we're looking to do, we've drawn from the lowest point to the highest point. We wait for price action to tell us that market's about to reverse. We can see that it's closing on the 50 smooth moving average. We've had a pin bar reversal. Price has touched 50%. And this is actually where we took the entry. Okay. Okay, so over here is where we select our long position because we're expecting it to go up. We've longed it, and what I always do, I place my stop loss between 61.8 and 78.6%, or if there's a last swing, a clear area of support here, just place it just below. So we could go for the 78. But for argument's sake, just for this video, we're going to say, let's do it here. And then what we're looking to do is have take profit at 27%, okay? And the reason I'm saying to 27% is because you can see 27% is just over here. Now, say for instance, the entry was on 50%. And so that's the golden line. Now I've just changed the line to golden. If you want to change the color and the scheme, just double click on it. And then obviously you can change all the lines. These are my settings here. I've just had 50% golden just because that's the key one I'm looking for. I'm not really using the blacks to trade off of, okay? So just this golden one here, 50%. So obviously say we've had the entry at 50%. We have it just about halfway between. And then our take profit is 27%. That's basically the risk to reward ratio you're looking at on almost every trade, okay? And this strategy is about 77% accurate, super easy. Some will lose, and you'll just lose, say, 45 pips. But the ones that win and come in, you're looking at 169 pips here. Say you won 3 in a row, and then you lose one, you win another one, you win another one, you lose 2 in a row. So all that matters, just with this, if we lose, we can lose 3 of these and win 1 of these trades and still be in profit and still make a profit. So just keep in mind your risk to reward. Just have it around here. Don't be dragging it around, because then that's when you don't get a good risk to reward ratio. And FYI, anyone who trades binary options, the risk to reward ratio for binary options, just a visual indicator, this is how much you risk and this is how much you're expecting to make in binary options. When you trade Forex, this is how much you're expecting to risk, and that's how much you're expecting to make. So that's just an idea of how much you can actually make with Forex as opposed to binary options. Now, the reason I'm saying 27% is because basically the market moves in what's called as like ABC movements. And basically, I just want to draw these out quickly for you. So we've had our beginning of the A coming up to here, which is joining the B. So we'll label this as A. I just want to quickly do this for you guys now. Then we have B is here, and our C leg will be 27%. So as you can see, we've had the A, and I'm going to draw these. And basically, these are what you're looking for. You're just looking for the general trend direction. You're waiting for the market to move in a direction that you. So it's in an uptrend. We want it to move upwards. There we go. It's hit our high. It's clearly had hit some resistance. It's pulled back. It's come along when it's created a lower high, and that's where we draw our Fibonacci. We wait for price to come back down to 50%, and then we enter it, expecting a 27% take profit. Now, if you want to do take profit level 1 and 2, you can have it set to 0%, because sometimes there'll be a double top, and as you can see, price tried to reject off of here, but then obviously the bulls bought in and the price broke through and it got to minus 27%. And this minus 27% and this minus 61%, these are known as Fibonacci extensions. So if anyone's wondering, these are basically called extensions. Now I'm going to put these in the description of the video. I just want you guys to have a look at this just to get more of an idea. But as you can see, we just draw from lowest point to the highest point in an uptrend. This one's traded off the 38.2 because that's where it just happened to trade off of, but 80% of the time it will trade off the 50% level. Perfect example of a downtrend. They don't have moving averages, but we use the moving averages just to help us gauge where the market's at and where it's moving. Obviously we draw from the highest to the lowest. That will give us 50%, which is halfway between these two prices. Price will pull back, wait for a strong price action, so that pin bar there, and then you enter it before the new candle forms, and then you would have made, and that's you would have made 3 to 1, 4 to 1 gain on that, and the extension here would be minus 27%. You would have made some really good money.